Well, hey there. Happy April. It is Monday, April 3rd. Wanted to share with you some of the latest data that we have here in the Austin market. I'm going to start with some February data, but really I'm going to set the stage because I'm going to wrap up with some new data we have that's showing us that the market's not ready to die just yet. In fact, could we see price actually going up a little bit now that we are in the heat of the spring market? Stick around for that. So this is looking right now. This is all the February completed data. We are this orange line right here. That's 2023. This is simply number of sales. Obviously, we're selling fewer homes right now than we've sold in the past 4 years, but we are going to likely be returning more to what we call the seasonal sales cycle, which if you think about it as a bell curve, it goes up in the spring, peaks around May, kind of goes sideways in the summer, and then the number of sales tapers off in the fall. You get a little bounce at the end of the year, people trying to buy before the end of the year, before Thanksgiving. They close in December, and that's why you always see that little tail kick up at the end of the year. But for right now, we are trending a little bit lower than we have in years past. This is sales volume. Again, dollar volume is a little lower than we had during the pandemic, but because home prices are higher, the volume's a little higher than we saw in 2019 and 2020. So we're kind of right in the middle there. Median home price, again, this was looking at the end of February. Starting last May, we've just continually gone down, down, down in median home price. It was more aggressive. You can see here, this light blue line, it was more aggressive of a drop through September last year when just the interest rates killed the market. It started to go a little more sideways, still down through February, but stick around. I want to show you some March and early April statistics that can show you there may be a new trend happening. We also have average sales price is going to show a very similar trend. At least through February, the price was continuing to come down in terms of closed sales. Total listings. So we're hovering right today around 8,500. So here we were at the end of February, about 7,100. You know, it always kind of starts the year and then goes up as sellers get their house ready. They get towards spring break and the number of listings picks up. We're probably sitting, let's say April, we're probably around here at 8,500. I just looked at it this morning, and that's traditionally normal. The number of listings is going to go up a little bit. The supply or the inventory of homes is going to depend on buyer demand. How much buyer demand is there to eat that inventory back up? And so anyways, but right now we're sitting about 8,500 homes. Months of inventories come down. I expect as we get into March and April, when this data comes out, we'll see that tick up a little bit because of the new home sales. All right, so that was looking through February, but let's look at some new data that we had coming in just in today, really. Ignore this last bar because that's April. We just started April, so this is going to be skewed on just a few sales. But if we look at this chart over the last 12 months, let me see if I can make it a little bigger for you. There you go. This is looking back at May. The median price, list price back then was 582. We were closing around 550. That was last May. And then it just went down and down and down. Really, if you follow the blue line, February, our median home price was 429. Remember, we were 550 in May, 429 in February. But now that we've got March data in, whoop, we had a little bounce. So now it's gone back up to 449. So about a 20K bounce. That's the first time we've seen the median home price come up since last May. Some of this is seasonal, as I said. We normally have the market slow down the second half of the year. You usually get the prices picking back up in the spring. They'll peak around June, and then they'll taper off again. And the reason home values go up is usually the spring is stronger than the fall. And so every year that bell curve is tilted on price. It's kind of, think of it as stairs that kind of takes home values up. So if we are returning to a seasonal market, I'm going to expect that we might see that median home price trickle back up through maybe June of this summer, and then we'll see it taper off again. So we're going to be watching that, but that's the first sign we've had that, you know, we've been talking about the spring market being healthy, but we really haven't had data to show that buyers are having an impact yet. Well, now we can see it. So in March, we're seeing that there's more buyer activity. There might be a little more competition for some homes, and that's creating the median home price to jump up a little bit. You can also see seller sentiment is also raising their list price too. And so again, we had the list price. It's been fighting. but generally it was coming down, and now it's had a little bounce too. But there's a nice gap here. So the median list price is 530, the median sale is 449. So there's still a lot of discrepancy between what sellers are hoping to get, what buyers are hoping to pay for, but we are seeing some buyer activity there. And just to reiterate, this is another research company called Altos Research. And so they have data that they can go down all the way down to zip codes. So I get this report every week. This is 78749. This is a zip code in Southwest Austin, for those not familiar. They have some just basic trackers of all kinds of data. You can see their little seller sentiment is spiking up. So this gray line was last month. That meter, kind of like a gas meter, was going towards buyer's market for about 8 months. And now it's starting to bounce back towards seller's market. And one thing, I was looking at this chart, this is all the way back to April 2018. And you can see how crazy the list price went up, 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 up. We got to May of last year, and then it started going down, 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 down. And then right at the end, this little tail right there shows us that whoop, we might be getting that little spring bounce again with the prices. So, starting to see some signs that now that we've gotten to March, that buyer activity is picking up, and it's helping kind of boost that median price a little bit. I don't think that we're going to make up all the damage that's been done since interest rates started. But if we can, as I've said, go sideways for the year, I think that's what we can see is you might get a spring bounce, might taper back in the fall. You look over the course of 12 months, and really the price kind of went sideways. That's what I think is going to happen. Finally, let's look at mortgage rates. So we talked about the banking crisis a couple months ago or weeks ago. This was the very beginning of March, so exactly 1 month ago, when you had the big pain point of Silicon Valley Bank and some of those banks going under. Interest rates before that were going up, up, up. You can see on the chart, just launching up to over 7%. Since then, this would be a 30-year fixed rate mortgage for a primary home buyer. It's really come down, and now it's just trending in this little zone between 6.5 to 6.75. And again, that's a national average. So anyways, again, if that stays in that mid sixes range, I think that helps give some certainty to buyers and lets them know what their payment's going to be when they're out shopping for homes. That's going to help them make offers and keep the market moving. So I did want to end with this. So I get, let's see if I can find it. I get a little email. There we go. I get a little email from several lenders sharing rates. And this is why the market is not going to go all the way back to where it was. So this is as of last Friday. This one loan company was sharing some examples of rates. So you can see here a primary home buyer is being quoted at 5.99%. So that's great. You're a primary home buyer, you're paying right around 6%. But if you're an investor, you're still paying a higher rate, more likely 7.25%. Or if you're buying a vacation home, you might be paying 7.25%. So again, know your audience. If you're selling a home that can be to a primary home buyer, well, that's a good position to be. They can get cheaper financing. But if your property is purely for investors, or it's a lake house and it's going to be a second home for somebody, well, they're having to go borrow more expensive debt. That's reducing the number of buyers looking for that type of product. So it's not an equal market across the board. Know your audience. If you are selling property that's going to be targeted just to investors, or it needs the cash flow for investors, or it's going to be that vacation home, your market's probably a little softer than a home that's going to be for a primary home buyer. And then, of course, down here, you've got alternative financing. If you're not getting Fannie Mae, Freddie Mac, maybe you're getting a 5/6 arm from an investor or a private financer. You might have interest rates up into the 8s. And so again, know your audience and know what you're going for. So what's happening in the market right now as we enter April? I think we can easily say we're feeling the market activity pick up. It's still much slower than the pandemic. A home today is going to take 1 to 3 months to sell, not 1 to 3 days, which it did in 2021 and 2022. But 1 to 3 months, I would say, is a pretty traditional sales cycle. If you are a buyer, you have more inventory to look at than you've had in the past 2 years. I would expect that you're not going to have as many deep discounts from sellers that you might have seen last fall, because there is more buyer activity out in the market. So if you are a buyer, just know an offer 50K or 100K off is probably not going to be very exciting for a seller right now, unless that home's been on the market a really long time. But you still have the opportunities to get some incentives out there. maybe some help with closing costs, maybe be able to negotiate. And if you're shopping for new construction, the builders are still offering certain incentives. They're not maybe as aggressive as they were in the fall, but we're still seeing discounts on interest rates or flex credits that a lot of new home builders are putting out there, which where they might say, hey, we're going to give you $10,000 or $20,000. You do what you want with it. You can either bring the price of the property down, or you can give that money to your lender and buy down your interest rate. So those are some examples of things we're seeing from home builders. I hope this information is really helpful. We plan on putting this information out every week. If you want to keep track of it, please subscribe on our YouTube channel, RyanKellyGroup.com, and you will find all our videos there. This is our big April market trends. We'll have another email coming out next week with some April updates. Until then, happy Easter. Talk to you soon.